General instructions. Dear participants, I request all of you to join back shortly for the next session using the same link by 11:35 a.m. Thank you.
The participant, it is a very short break, so kindly join soon. Thank you.
Cyril K. Babu.
Vision without action is daydream. Action without vision is nightmare. Japanese proverb. Good morning, one and all present here. Myself, Soumya, and I am here. Have a great chance to introduce our honorable guest, Shri Cyril K. Babu sir, for our sixth session of Management Development Program. Today, sir is speaking on a topic of emerging challenges in retail banking. Retail banking, which is also known as consumer banking or personal banking, it is the provision of services by a bank to the general public rather than companies, corporations, or other banks, which are often described as wholesale banking. Mr. Cyril Babu sir completed his pre-degree in Devamata College, Kottayam. He did his BSc in Christ College in Bengaluru. He is also a prestigious alumni of our KRISTU Jayanti School of Management and completed his MBA by 2004. Mr. Cyril Babu had started his career as deputy manager in Axis Bank Private Limited and got promoted as manager in 2 years and served as senior manager for 3 years. Then he got promoted as assistant vice president. Currently, Sir is working as deputy vice president of Axis Bank Private Limited. Cyril Babu sir is a good in team management, business development, and retail banking, and also having a high quality of leadership. I'm happy to invite Mr. Cyril Babu to share his expertise on the topic emerging challenges in retail banking. We welcome you, sir, and session is over to you.
Thanks, Soumya. First of all, thank you, Aloysius sir, Baby sir, and entire management of Christianity College for giving me an opportunity to address this kind of a big gathering of future leaders, future business leaders. So, as mentioned by Soumya in the introduction, I am a proud alumni of this great institution. So, currently I am working with Axis Bank in retail Forex and remittances business. So, our topic is innovations and opportunities in retailing post COVID-19, the next normal. That is something which we all expect now. And emerging challenges in retail banking. That's the theme which I would like to cover. So, as you all know, COVID-19 pandemic impacted very adversely retail industry. Like any other industry, it is impacted very badly. But however, we have seen some segments blooming up in during this time. We all know in our neighborhoods, we have seen a grocery or kirana shop. They are doing good business. Maybe something which they were doing pre-COVID time. More than that, they were doing post-COVID time. So it has impacted some of the segments, mainly luxury, clothing and all. It has impacted very badly. But on the other front, it has impacted almost all the retail industry. So even if you take healthcare, So we all were under the impression healthcare is doing good. So when I was interacting with one of my friend who is working with the Himalaya drug company, so they are generally producing supplement medicines and skincare kind of a medicines. So they used to send some 20 consignments export every month. So it has come down to one consignment. It has come down to that extent. So even in healthcare, in medical, and even in medicines also, this has impacted very badly. Other than life-saving medicines, it has impacted almost all the segments. So during this pandemic, we have seen rich people, some of the rich people becoming more richer. Okay, so we have seen Jeff Bezos, his Amazon founder, his wealth has increased by 75 billion, almost 70-80% of increase in his overall wealth. We have seen let us talk about this platform, Zoom. The founder of Zoom, Yuan's wealth has increased by 400% during this pandemic time. So even Mukesh Ambani's wealth also is increased almost double. We have seen that was there in the news as well. And even in when we talk about the retail industry, even e-commerce, e-retail, we have seen during last month, I am sure all of you had gone through, seen this news, almost 26,000 crore business happened during Flipkart and Amazon big sale day during Diwali season. So some segments, they have done much better than the previous year. Some have done multi-folds. So no, definitely there is an opportunity, and we have seen many technologies coming up during this time. So this, when we talk about this platform itself, if a pandemic would have been there, we wouldn't have connect through this mode. We would have had a physical interactive session only. So so now this platform is giving you a lot of opportunities. Otherwise, probably this would have come maybe after 5 years or 7 years, 8 years time. So this retail, this pandemic has actually taken us forward in certain segments. 5-year economy definitely downward, but on technology front, it has taken us minimum 5 to 10 years ahead. It depends upon product to product, segment to segment, and all. So again, this crisis has revealed cracks that is existing in the system, because we have seen many people were running behind looking for digital solutions during this pandemic time, because many of them did not had or they were sluggish about the technology. Maybe they were very conservative and following traditional things, including banks. But we have seen many of them were looking for technology. Some technologies they could complete it within a 2 months time or 3 months time, which ideally would have taken for 5 years or 10 years, or which was never priority for them. Now it has now become within 2 months time or 3 months time, they could succeed in giving a digital solution to customers. So when we talk about innovations during this pandemic, there is a difference. Pre-COVID time and post-COVID, there is a difference in innovations and how the business model, the overall outlook. So basically, the innovations earlier was purely to generate business, to be succeed in top of each and every segment, or the corporates wanted to be in the leadership position in their respective segments. Now post-COVID, there is a difference. Now it is for survival as well. It is not just to increase the business. It is for surviving as well. So we will come in detail in the later stage of this discussion. So just for everybody's understanding, I'm sure you were having keynote sessions, many speakers. I have seen the brochure last few days. I know you all know, so I am not getting into detail. but I just want to just define what is retail. Retail refers to the activity of selling goods or service directly to consumers or end users. This is basically for the targeted consumers and end users. So again, when we talk about retail banking, so banking forms the backbone of the every economy and play a critical role in the lives of all the citizens. If you take India, almost 80% of people are having bank accounts. Still 20% of people are not having bank accounts. Still some banking service they are doing. However, other organizations affected by pandemics, banks also have undergone a lot of stress, lot of issues, and they have to undergo a long term. There are other than short term. When we see pandemic related crisis, we're seeing two type of issues. One is short term or mid term, then one is long term. So banks will have to also undergo long term issues, and they will have to make a lot of changes. They will have to adhere to the guidelines, and because banks, there is a difference. They will have to adhere to a lot of regulatory aspects. They have to go. They cannot go all out. They cannot simply go behind a technology, or there is a lot of things involved in a bank. It's a completely regulated. There are regulators who are completely end-to-end monitoring, and it is a financial related thing. So banks cannot go all out. Definitely, all the technologies which are there in place. I'm sure you are having classes. I have seen brochure. You are having some classes on, especially on new technologies and all. So definitely, some of these technologies are also there in the bank. So I will like to cover that as well. So in later part of this session, we will come across all these new technologies which are there. So when we talk about innovations, banking or without digital, first thing comes to our mind is digital. Okay, so anybody talks about digital, talks about innovation, first thing comes to their mind, or they talk about digital. So digital plays a critical role in terms of innovations and opportunities. So now I would like to explain what is retail banking. So retail banking is like a part of it is retail. Retail, we know it goes to end users. It is also called as consumer banking and services by bank for general public, rather than to companies, corporations, or other banks, which are often described as wholesale banking. So this definition is self-explanatory. So I need not have to go deep into that. Or so what is the importance of retail banking in banking industry? Why banks? So it's a revenue stream. All this normal. It is always profitable business, right? Any business, whether it is bank or anything, expansion is always a profitable. They will be looking for profit. Why? What is the role of retail banking apart from all this? This is visible banking to general public. This creates a brand. So if somebody is only into commercial banking or a corporate banking, the visibility will be low. So retail banking visible to general public, risk is spread and good recovery rate. So we are seeing last few years a lot of fraudulent activities are happening, especially in corporate segment, and this all are high value ticket cases. High value cases, this will have a huge impact in banks liquidity and other issues. So here the advantage is risk is spread and the recovery rate is good, and the profitability is also at higher side. Profitability is higher side means basically so individual we can go for a better rate. The banks can go for a better rate. The margin will be always, spread is always good. But when it comes to corporate, again that way also, apart from this risk related issues, even in margins also, will be less. Let us come to our topic today, emerging challenges. So first of all, it's a very good topic. I'm sure this will be very helpful for each and every one of you. So when we talk about emerging challenges in retail banking, so I would like to define short and mid-term and long-term and other inherent issues. So short and mid-term is basically mainly affected because of the pandemic crisis, lockdown and other things. Long-term and other inherent issues, banking always is having some inherent issues within that. It is not related to COVID alone. So long-term, there will be long-term issues in banking, but COVID has made that multiple X. That issues will blow out of the proportion now, because there were issues that is going to increase because of this pandemic. So that's why I have classified in this way. So short-term and mid-term challenges. So short-term, all of you know, it is not only banking, handling pandemic, employees safety. First of all, banking was a essential service. Employees had to visit branches. A lot of people tested COVID positive. A lot of issues, other casualties also were there. Then we have to also look at customer safety. Handling pandemic was a issue. It was a real issue. Because the rotation basis, the staffs were coming to office on a rotation basis. Still, many of them tested positive. Then other issues. Then customer safety also we have to ensure. But customers' footfall was very less that way. Thanks to, but still footfall was high. Even if you look at some of the banks which are having lesser number of branches, we can see a big queue in front of. If I was traveling in MG Road the other day, I saw a very big queue in front of Citibank and all. So business impact in certain segments. So in case anything you need any more information or anything, if I can, you can, after our session, we will have a question and answer session. So you can raise it that point in time. So business impact in certain segments. So change in consumer behavior and needs. So this crisis has actually made a lot of changes in consumer behavior, and their needs and priority also has changed. So in banking, segments, see, there are a lot of ideal funds that have come. Many of them, their deposit in savings account has increased during this pandemic. So that is one of the behavioral change we are seeing. Some of them have gone for investing more in life insurance and other investment products. So banking, it has not impacted in all the segments. Like I mentioned, in overall retail, luxury products, clothing and all impacted big way. But there are other segments it is not impacted. There are some, I have already quoted that. So same way in banking also, some segments we have seen a spike or surge in business. Basically in savings account deposits. Then we have seen investments like LI. Investments also not in all the segments. Mutual funds and all, it was low. There is total change in behavior. Customers was not going all out. Nobody wanted to take a risk. Nobody wanted to get into anything new. Even if we have seen a dip in overall the asset business in the sense loan. People are, even after interest rates, you have seen the RBI has reduced the repo rate, reverse repo rate and all. So still, because of that, the interest rates have come down, but still, slowly picking up. In loan segment, it was impacted. Loan segment is picking up now. So job loss, salary cut sentiments in customer behavior. So job loss create, and fear, the sentiments, the fear. Many of them have not lost the job, but that fear was there. So people were not, because of that uncertainty, it was affected the, banking, doing the banking or taking any kind of risk related product. So salary cut also we have witnessed during this pandemic for many corporates. Definitely such kind of a scenario will have an impact in customer behavior. And job loss, when we talk, not only in India, even Indian bank will affected, because a lot of NR customers are especially blue collar jobs. Many people lost in especially Middle East and other countries. So definitely that also had made an impact. In this crisis, this is purely a part of crisis impact. This is purely a pandemic related. And one challenge which everybody was faced is lack of preparedness, crisis management. So nobody was all the institutions, any organization, whether it is bank or anybody, they are having a business continuity plan in case of disaster or any kind of challenges. But this kind of a pandemic was not part of most of the organizations, BCB, business continuity plan. This is a very critical plan, and a crisis like this. So today this is a pandemic like corona. Tomorrow it can be something else also, which can be, we cannot predict what will happen tomorrow. Now, at least when we talk about this, everybody was business continuity plan in case of network issue, or maybe business continuity plan in case of any fire, any other issues. This were part of it, but this kind of a massive thing was never part of. People were it created some confusion in the beginning how to go for issue. So another point which I would like to highlight is lack of robust digital solution in some segments. So I mentioned about it. So one thing in one of the articles, retailers are the trend towards digital has been happening for a while, and a lot of retailers were not prepared. Now they really need to innovate. So there were options. Everybody was little sluggish on this, so nobody expected kind of a crisis. So but then everybody started running behind technologies and innovations once this outbreak happened. So now I would like to touch upon long-term and other inherent issues. So most of us are thinking, okay, this pandemic is the major issue. Now, once we are getting a lot of positive news about vaccine coming in. So 2-3 vaccines are ready. Russia, from Oxford, US, many countries it is now. I think at least three different vaccines are already lined up for massive production, and some of them have already started as well. So we all are thinking once this medicine comes by somewhere about by 2021, mid 2021 or end of 2021, so things will back to normal. It is very unlikely to things coming back to normal. Recession is one of the main issue that is going to happen, because we have officially gone into recession. I think you all have read in newspaper yesterday. We are officially after though it was signages were there in RBI report, and the finance minister Nirmala Sitharaman had announced around 2-3 weeks back some stimulus. So that was giving us but now we have officially entered into this. So what is a recession? An economic recession is a significant decline in economic activity, real GDP, and real income or employment, industrial production and sales following a decline in aggregate demand for at least 2 quarters. So GDP to 2 quarters, we have contracted around 23% in Q1 compared to last year. Then this year, again Q2 almost 8% we are again contracting. So we are degrowing on YOY. So definitely 2 quarters, it is called a recession. This recession will have a long-term impact. So recession, people will lose job. People will have a lot of stress. They will they are very very close to the various. They won't get into taking any kind of risk or not getting into any kind of activity. A lot of issues will come because of this recession. Banks also plays a key role here. So banks can actually boost the economy and other things. So we have seen now the interest rates have come down because of the RBI intervention. So still, that is to make people invest in or take their money out to the economy. So that's why such still, even after the interest rate coming so low, we are seeing some green shoots are there reviving, but definitely recession will be there. Then what we have to see, recession already officially ended, then we will have to see whether we will get into a depression. So the depression is the one of the worst scenario of recession. So no, I don't think we will because of green shoots, but it is all depend on how things will revert back. So we are seeing many companies now giving work from home options. Even banks also, many banks, we can never imagine somebody can go work from home for in a bank. But bank, definitely branch banking, it is not possible. But in certain offices, certain business, even work from home has been adopted by bank. So even in company, government officially made policy changes in work from home. This year we have seen many companies already given work from home for all the IT employees. Already given for, maybe it may extended next year also, they may go for that. Now a lot of companies also understood that work from home also is very productive, or probably it is more productive than what is there. And many of companies, you may see, they will be shutting down their offices, or maybe if somebody is having a 6th floor occupying in a 6th floor building, they may retain only 1 floor. Even if any employees wanted to come any for gathering, they can book the date, save the time, and book the date, so that they can come to office and do their office activities, or anything needs to be done. So only thing is that they need to book. If slots are available, they can come and do. So instead of maybe 6 floors, they may be occupying only 1 floor. So a lot of things we will see going forward. So one is decreasing profit margins. But definitely, there are that is one of the major challenge for banks. So one is competition. Competition is there. Then too much of technology, intervention of technology also. See, for example, XC. I handle Forex department, Forex business. So I'll quote something related to that. All of you, I'm sure at least some of you know what is XC.com and the IBR rates. Yeah, some people can see the rates, the live rate, trading rates, the trading rate which is happening between banks internationally. So that live rates are even now visible to end customers. So earlier, about 10-15 years back, the margin of Forex transaction was 5%. Now it has come down to very 0.01 to 0.1, around 1 up to 1%. So even 10 paisa, 15 paisa kind of a margins. Earlier the margins was 5 rupees per dollar, or that was a scenario earlier. So around 15 years back. Now with the increasing technology or increasing the customers access to various sites or various technologies, so customer awareness are there. So definitely these are some of this are beneficial for the customers. As a business leader, we are looking at on the corporate angle as well. We are looking at the profit maximization as well. So definitely some of them are customer useful, beneficial for customers. This kind of a competition access is beneficial for customers as a customer. Then obviously expenses incurred towards pandemic response management, it will be a cost. Two type of cost. One is they are investing in certain things. Second is provisioning. Banks are doing provisioning, seeing long-term issues, provisioning to handle the ongoing crisis. Then rise in NPA and NPL, non-performing assets, is a crisis, or NPL is non-performing loan, same. So rise in NPA or NPL it has increased. So government has given moratorium over for repayment. So this is one going to be one issue. So this will be like a byproduct of recession. So we have seen recession in 2008 globally. So but now this is going to be much more now. So countering, then another issue is countering the threat from challenger banks, neobanks, fintechs, and big techs. So this is a bigger threat. So I'll come to opportunity part later. Challenger banks, neobanks, and all complete digital solutions. They don't have manpower cost and they are coming with many technologies, fintechs like UPI based apps and all. Google Pay and other things. Then neo banks like Reserve or Neo. And we are seeing big techs many of them are entering into, at least not here, they have started globally. They will be coming into this financial segments. They will be giving loans. We are seeing peer-to-peer loan options now. So you may see big techs giving loan to customers. For example, Amazon, you may see Amazon coming into this, probably can happen. So now these players will get into that. Amazon, if you take Amazon is very aggressive in, so they are into e-retailing. Everybody knows that. So what they were doing, one thing is in US, many other countries, even in India also, what they are doing is they tie up with the vendors for many products, giving to selling into their customers. They first onboard vendors. Then later what they do is, if any product is success, or if they notice it is moving in faster, or the demand is high, so Amazon, what they used to do, they produce that product their own, and they sell that, and they becoming a market leader. So that trend is there. That is I think regulators are closely watching, especially in US as of now. So same way, this big techs may enter into such kind of activities in financial. They are already entered in some countries, but we will see here also that kind of a trend. Another thing is embedded finance. It is same. Embedded finance, just now we discussed, maybe you will see other than banking institutions getting into this finance model. Maybe through funding, they will be seeing these funds. They will be arranging this kind of funds. Another issue is monitor deposit fluctuation. Banks need to keep a close watch. Whenever the interest rates are high, it is good for bank, because banks will have will be having a higher margin during that time. Whenever the interest rate is high, banks will have a better interest rate. Then another issue is credit risks and collections. Credit risks are there when you approach the same issue like rise in NPA. Credit risk and collections will be an issue when bank is sanctioning a loan. Banks will have to look at multiple, the repayment capabilities and other things. After this pandemic, it has got worsened. So again, collections and other things, they need to look into it. Then employee attrition, it is mainly related to private sector banks, the employee attrition and the this is impacting the business continuity. Customer relationship manager gets changed, that will have an impact. Or some employees resigning from here and joining another bank, there he may take the customers along with him, or make customers to shift the account. Customers are doing banking with the 2 or 3 banks. We all do. We're having, most of us having 2 or 3 banks, but we do primary banking with one bank. Generally, we do all our thing. So banks facing the major challenge, they wanted to make their bank primary bank. So that is one area. So one-stop solution is something which customers are looking, a rich customer experience. Customer experience is a journey, so wherein customer should experience the end-to-end. So if somebody cannot give a end-to-end customer experience, it is a high chance that somebody may bank with others. Slowly that bank become primary bank for customer. So now the bank is looking at each and every customer is taking maximum products from them. So that's why you see many banks are having multiple products. So when you talk about ancient banks, or the beginning, the start stage of the bank, all know what is the definition of banking, wherein it was only lending and borrowing of money, or wherein receiving deposit from customers and lending. So later they got into insurance products and all, investment products. Now we see in modern banking, we see so many options, so many things for customers are available, starting from normal savings account, then insurance products, then mutual fund, lot of one stop, and they are tying up with a lot of fintechs as well. Though fintech is throwing a challenge that cannot be ignored. So now banks are looking at collaborating with them. So employee attrition is one area which is having an impact. So I would like to cover up some innovations and opportunities. So when, as I mentioned in the beginning, see innovations, when we talk about innovations and opportunities, but it is purely digital. First thing which will come into us is digital. So I will cover that part towards the end of this session. Probably I may take 5 to 10 minutes more. So what all are the innovations and opportunities? See, as I mentioned, innovations mean we don't have to look at something very high level of innovations happening. Even a small kind of a thing or a granular kind of a thing also is an innovation. We have seen small innovations during this pandemic. Some grocery shops, suddenly they are starting their some vegetables also they started selling through their shop. It was never there before. And some vendors I have seen, they are not part of essential service. They also started keeping some kind of vegetables and to just keep their shop open. They started selling vegetables along with their other shops. So we have seen it is all small kind of innovations by some of which happened in our neighborhood. We were observing it, right? When we go out to the street, then we observing such kind of small innovations. We were seeing some small shops which was never accepting a digital payment. We are seeing now all of a sudden they are accepting digital payments and other things. So people wanted to go do a social distancing, or people do not want have contactless. People want contactless interactions with whether with a vendor or with a shop, whatever it is. So staying connected, what they can do is staying connected when customers are not banking. So customers, lot of consumer behavior changes I mentioned. Customers had kept savings bank balance has gone up. That means customers have kept the funds idle. They may not take a decision, but keeping in touch with customers is critical. Staying connected, that is very critical. Then simple to use, consistent and personalized omni-channel experience. All of you know what is omni-channel. Multiple channel experience. When you talk about branch banking is one channel. Then you talk about the digital solutions are from bank side, multiple digital solutions are from bank side. So banks are having a digital house separately, or wherein customers can walk in and do their transaction digitally as well. So knowing details what customers want. So what customer wants, we need to identify. So we need to give. See, in a bank, what happens? There are minimum more than 50 products are there. So now talking about the key main products alone will not help. So we need to understand. See, for example, in a forex, what happens is, if a customer, it is a kind of a need-based product. So it is not like a push product like a insurance or something. Forex is a need. If somebody is not traveling, I cannot push somebody to take Forex card. So last year I came to your college, so I met your senior batch students, and I had given people, students who had traveled to Singapore, I had issued foreign exchange card. I came along with my team. We had a chat with people, the students who were traveling, Singapore. So I cannot push entire team, right? If somebody is not traveling, I cannot give a Forex card. So this is a critical activity, and know what customer wants. So you see, what happens is Forex is a need based. So if we think that no customer will come and take it from our, so customers are having other options. Customer will prefer going to a money exchange company. Their competition is there. Money exchange companies like a Thomas Cook. Customer, in case we are not talking customer, what customer perception is, there is a exclusive outlet for Forex. They may give better rate. They have a faster solutions. But these money exchange companies are actually using the facilities of banks at the back end. So nobody can do a outward remittance abroad or a card on their own. When if a startup like a Neo Cards, Forex card, it is using a platform of DCB Bank. So in case of outward remittances, SWIFT remittances and all, a company like Thomas Cook or they cannot do their own. They will have to route it to a bank. So if in case, but still customer perception, most of the customer perception is that they are into this business, only they can do. Banks are secondary in this particular market. So that is something which is very critical. When you look at if somebody would have, I'm not sure how many of you have taken a Forex card or traveled abroad. In case you have taken a Forex card, it must be of a bank. Probably they have done a white labeling of the card, maybe the money exchange company's name reflecting on the top, but the back end of the card, somewhere it is mentioned powered by, or it is supported by some bank. Even a new startup like Neo, which is introduced INR card for people who are traveling abroad. It is a DCB Bank supported card. And why this fintech customer, a Neo card is not a success? Why? Because it's a kind of a startup company. So that's where the advantages of the banks. Customer trust is very critical in banking. So not the customers will just simply go behind the innovations, because the kind of charges, waiver and all they had given, it should have gone gone very high. But none of the corporates travel, in corporates, employees traveling on site, none of these companies actually looked at having a tie-up with them, because they are trust-based issues. Customers are not trusting to an extent this kind of, especially when it comes to financial dealings. So deliver relevant products and interaction. So it is same we discussed now. We need to pitch right products and interaction. Customer experience also we discussed. Customer, it should be a journey. Customers will be having it is like a journey wherein they should get everything, and they should not have any, it should be flawless. There should not be any obstacle in that. They should get all the experience, then only they will bank with, and it will become a primary bank. So it is very critical. The new designing concepts, it's again part of that. Improve merchandise agility and visibility, that also we discussed. So another strategy is move to the survival minimum, cost cutting. So cost cutting, everybody knows, multiple type of cost cutting. And when you talk about banking, some of the branches you will see, getting closed, maybe not profitable. But moving digital, and it will not, branches will be still be there. So only branches can give that human touch. So branches will be going to be there. Cost cutting part of that, maybe you will see, because branches, the bank branches were growing like multifolds. Even Axis Bank is having 4,500 branches now all over India. It was keep growing, and every year some 500 branches used to be added in recent past. Now everywhere in any bank, probably new branches may not come up. Maybe very few branches. Branches will still be there, because many customers, at least this stage, this generation, many customers are looking for human touch. So building consumer trust, we already discussed. Then precision marketing, upsell, cross-sell, and retention. I'm sure you all have gone through the theory. Upsell is something which we sell more to a customer, or a same product, different version or upgraded versions giving to a customer. Cross-sell is a cross-functional sell, wherein you sell other products. When the customer giving options, other products, talking about other products, and this is are the key terms. Then retention. So precision marketing is very critical in banking, especially upsell, cross-sell, and retention. Retention is very key now, because once you lose a customer, it is very difficult to get a customer of that size back. So like in the world's GDP, or the rich people, almost 1.2% of people are contributing to almost 40-50% of wealth. So same way, in a bank, some 15-20% of customers are contributing to 80% of overall bank's major business. So if you lose some of this customer from this major segment, it is going to be an major impact. Getting a customer or of same size is always a difficult. So granular approach is another critical term which we use in banking. Granular approach is nothing but going granular. Granularity is very critical here, because customer big ticket. So always everybody will be enticed with high value tickets, maybe getting a 5 lakh income from one transaction, or 10 lakh income. But see, the future is with the granularity. So this high risk, if in case of anything, X, Y, Z reason, if somebody is not banking, or high values are not bank at risk. So banks are more focusing on, obviously high value is there, but still how this 5 lakh income or 10 lakh income can be generated from 10-15 customers. So that is called granular approach. Reaching, banks are having immense data with them. So using of this data is also critical. Pushing of this data, we will come to see that in later part, AI, how AI and all works. On banks, most of the banks are having a lot of data which is unused, properly used. So this data can be used that way. Then create COVID sensitive products and service, maybe smaller, like increasing online transaction limit, or a NEFT or RTGS limit, or maybe increasing online transaction, or outward remittance transaction, or card swiping limit. such kind of some innovations can be done. Then digital account opening, Aadhaar based video KYC, and all some innovations happened during this time. Video KYC, all of you know, I'm sure all of you know what is KYC, know your customer. Banking, it is very critical. RBI has given an approval, now everybody is coming up with Aadhaar based video KYC. So this is one of the innovations or something which has happened during this COVID. Digital account opening was there with a lot of restrictions, lot of limit. Now with video KYC is coming, customers can avail whatever facilities is there in normal, normal accounts. Another issues banks are facing is understanding and tackling KYC and AML issues. So this is another area where sir, if I'm overshooting the time, please stop me.
Sir, we can have 5 more minutes. Then
5 more minutes, no question answer, no.
Then
okay, I will quickly. I'll take it. So resiliency plan, then collaboration with fintech and big tech. So that is critical now. Though that is a biggest challenge for banks. So the fintech tie-up with fintechs are very critical now. So you are seeing banks are having tie-ups with the UPI-based payment and other things. Fintechs cannot be avoided now. So so collaboration with fintechs are very critical. Then keeping a tab on branch banking strategy, we have already covered. Keeping a tab on government policy and providing instant tailor-made products. So government policies, keeping a watch on government policies, whether government is announcing any stimulus, how we can give a tailor-made products basis that. This is something can be looked upon. Then continue to build up strong societal relevance. Societal relevance is, it comes to empathy and other things. Societal relevance, the banks needs to build that societal relevance to remain in the business. So sector analysis and high frequency analytics, it is part of AI. So I'll move to digital innovations with so I'm going a little fast now because we have 5 minutes. Then after that we'll have a question and answer session. So retail banking with artificial intelligence. So I'm sure all of you have seen artificial intelligence. It's a very critical area. Artificial intelligence is predictive analysis, process automation, realistic interactive interfaces, effective decision making, risk management, fraud detection. See, artificial intelligence is this segment actually given an explosive growth to the banking sector in last decade. So it was, there are a lot of unstructured data which was available with banks, as I mentioned before. So this has given a structured way of data with the support of computing, cloud computing. I am sure all of you know cloud computing, machine learning technologies and all. So these are some technologies which are used. Artificial intelligence had gone way forward. So this is giving a trend, predictive analysis, trends, then lot of process become automation done, lot of human works got reduced. So realistic interactive interfaces have come in. So natural language processing, then it helps in risk management and fraud detection. So this all are self-explanatory. Then natural language processing is something very interesting thing. So in banking now you are seeing chatbots and all there, chatbots, and now the latest introduction in banking is WhatsApp banking. So even if we send a message immediately, you get a reply either to chatbot or through a WhatsApp from the bank. You can interact with them. And the natural language, your language. So for example, you are saying, I lost my card. So maybe system will interpret that. System understanding also there. Natural language and understanding. It is now natural language and processing, and it understands. What do you mean by that? Or you just mentioned, I lost my card, then system automatically takes that this card needs to be blocked. Or that kind of that is one of the latest technology which is using. It's not latest, it is already there, which is a part of subset of artificial intelligence. Then comes machine learning. Machines learn. So without having machines learn from each other. One system will interact with another system and data. We know how to have give a command or something for reading that data. Machine will learn automatically from whatever changes happening in other systems or other applications. Then comes its emotional intelligence. Emotional intelligence in banking, emotions, it is more human. So it is again artificial subset of artificial intelligence. But in coming days, you will see in banking now only we can see call centers and all can recognize whether customer is from the voice, whether customer is in an angry mood, or such kind of things are there. So we are yet to see, but still when we talk about emotional intelligence, even now the humans can give, when we talk about the human interactions can have more involvement in this kind of technology. And when we talk about the digital technologies, we have ATMs, online banking and mobile banking. ATMs in 1980s and online banking we have in 2000. Then again in 2010 we have we have seen mobile banking coming up. Then we also saw UPI based payments and internet, IMPs, mobile payment from the banks, UPI based payment, wherein fintechs are getting there. You have seen Paytm coming there. You have seen Google Pay. So now WhatsApp also is entering into it. You can make the through the message. Chatbot already there. WhatsApp banking is already there. That is not again the bank's own product. WhatsApp banking will be bank's own product. They can interact with the bank wherever they hold the account and get the details. So then digital accounting and video KYC I have already discussed. Then application program interface is a technology which allows multiple to interact with multiple systems. Then cloud computing, this allows huge data to be stored in a specific digital format. Then banking as a service, again fintechs or third parties getting access to banking and access the data. Robotic process automation we discussed, automating of lot of process. Augmented reality, banks have slowly started using augmented reality. Everybody know through they can get a feel and experience. They can experience, but in banking it is as of now limited. But when you go to banks, mobile banking and all, now you can see which gives like a 3D kind of a view for identifying locating the branch or a particular merchant where bank is having a tie-up. All this can be seen through a augmented reality. So augmented reality scope in banking, it is still as of now limited. Definitely banks have started. A bank like Axis Bank, if you go to Axis Bank, your mobile site, you can view the branch locations and in a 3D mode. P2P payment, peer-to-peer payments and blockchain. So blockchain is a cryptocurrency model. Cryptocurrencies, you know how cryptocurrencies work. It is in a blockchain. So now that same blockchain model banks may adopt for international fund transfer and all. Now international fund transfer, they have to rely upon 2-3 banks, correspondent bank, Nostro bank. Through that bank, it takes generally 24 to 72 hours to reach the money. Once blockchain technology comes, banks will be able to transfer the fund immediately in a virtual mode. and video collaboration and marketing with the increase of technology. This is a new area where the banks are getting into because of big techs coming to the market. Banks are running in a fast mode. That's it from my side. Now, happy to take questions. I hope I could cover towards end because of interest of the time. I had to go a little faster.
Can I start the question, sir?
Yes, yes.
Thank you, sir. It's a very valuable session. And the question is from Jacob Sam, MBA first year. Sir, in 1994, Microsoft founder Bill Gates made the statement, banking is necessary, banks are not. This was with the advent of ATMs 24 years back. We now witness lots of digital banking innovations with even more innovation to come. So do you think in the future there is a possibility of slow disappearance of physical branches and banking functions totally being automated, digital and virtually controlled?
Yeah, see, now a lot of, as I mentioned, a lot of banks, neo banking and all is basically small bank or neo bank or challenger bank. It is all fully automated. And I also mentioned the neo bank, neo cards. The acceptability is not there. The customer trust is very critical in this area. So definitely branches is going to be there. There will be downfall. Maybe now we cannot predict what will happen in 2050 and all. Probably there will be a with the new generation. Yeah, I think. Can you please mute? Somewhere it is echoing. Yeah. So current, as per me, definitely these branches are going to be there, and people are looking for human touch, especially when they deal with financial transactions. It is not like a like something you buy from a Amazon or something. But banking definitely human touch also plays a role. And the other day I've seen one of the 80-year-old man came to our branch and sitting. He wanted to go out somewhere, and he found his bank is convenient for coming and sitting and spending some time. So there are customers who wanted to have that or human. There will be a limitation. Machine learning will be there. Emotional intelligence will be there. All these things will be there. Natural language will be there. Still, customers will prefer. Definitely, this is going to be there. Branches going to be there. Probably the number of branches increasing, maybe less. And definitely branches will increase in remote areas as well. So this is going to be there. Yeah, I don't see.
Yes. Next question is by Megas Caria from MBA first year.
Yeah.
Sir, with the present era of mobile retail banking and major investments in data analytics and artificial intelligence, do you believe Bitcoin with the blockchain will be the future?
Yeah. Blockchain will be definitely the future. No doubt about it. That is increasing. But when you talk about blockchain, first thing probably coming to mind is cryptocurrencies. People investing in cryptocurrencies. On that front, where the outlook till 2018 was different. Even Indian RBI had declared that is illegal activity. Investing in that later, Supreme Court has mentioned it is a legal thing only. But in 2018, all of a sudden, these cryptocurrencies were increasing in. This I'm not talking about banking perspective. This I'm talking about individual investment segments. Individuals were investing in cryptocurrencies, and RBI mentioned it as illegal. Then Supreme Court mentioned it is legal. Wherein in 2018, cryptocurrency value from 20,000 all of a sudden it has come down to 3,000 level. So that is a issue for the individual customers. So it is never going to be a threat for bank. It will not be going to be a parallel kind of a thing, and the reach will be difficult. The technology is encrypted. Blockchain is a very encrypted version, but this will not, that way there is not issue for banks. It is not a threat as of now. And in sometime 2-3 years back, it was referred as one of the threat for banks, but now it is no more a threat. But blockchain in banks will definitely use this. That is a future. I mentioned on that virtual banking, virtual money transfer. If for international, for example, international money transfer, this immediately the money can reach to the other bank. If I wanted to send money to my friend abroad, I can send it within immediately within a minute's time. I can send the money. Otherwise, it will take now 24 to 72 hours. It may have to go to multiple Nostro bank, correspondent bank, maybe through an intermediary bank. Multiple banks may come into picture. So this is future. Definitely, blockchain will be a future.
Yes, sir. The next question by Deepak Matthew, MBA second year.
Yeah.
Good afternoon, sir. You are managing Forex at Axis Bank.
Yeah.
Can you please guide us how to get a career in Forex?
Forex is a specialized product. Lot of specialization is required. So it is critical that you enter how you enter into because so generally we recruit when we recruit team members, candidates or pickup candidates. We generally look at who are having experience in Forex. So if you are looking, so once you get into banking, any banking, once you get into banking, you will have multiple opportunity. Job rotations are there. Probably after 2 years, you can either you can join in a Forex sector straight away, or through job rotation ones. But higher levels, they always look at people who are having experience because it's a specialized product. So with that interest also is required in this particular product. How deep you can go into the matter, and so a lot of things you need to explore your own, because now what happens in Forex, you will have a lot of system automations and other things. Probably you may not learn end to end. Many things you may not. So it is, or probably at the front end you may not see what is happening at back end and all. So you need to develop that curiosity within yourself. You need to learn multiple things once you get into a Forex field. So Forex field, multiple areas are there. It can be like sales, operations, treasury is there, international banking, dealing with the international banks are there. Like we have a, like I am, we all have a RM from a bank. Same way, bank will have a RM for their international relationships. So all these things are there. It's a very in Forex itself, multiple areas are there to be covered. So definitely, you need to get specialized on that after moving into that field.
Yes, sir. So let it be the last question for the session, sir. Sir, in current scenario, the minimum deposits are increasing, okay? And per day withdrawal limit is decreasing, and service charges are increasing with respect to digital banking. In this scenario, retailers, as earlier, may go for suspense money transaction or through a partner system. What about your comments, sir?
No, see, definitely these competitions. Now there is no regulations. Regulations not given by RBI or on charges part. Charges, there is a competition. Everybody is viewing that. What is a competition? Now, earlier days, if you were doing a NEFT or RTGS transfer, fund transfer, or through a mobile transfer, bank used to charge some amount, 5 rupees or 2.5 rupees, 5 rupees, 10 rupees, according to the amount. Now, with the technologies coming in, now these all are free. Nobody is charging NEFT transaction with the fintechs and other things coming in. So banks are keep on watching what is the changes which are happening, where they can charge, how they can take, and all this. But some of them have come down on the rates. The charges they have come down. Then there are some regulations. We cannot keep going. Keep charging customers on non-maintenance balance and other things. So it is not, as you mentioned, it is not, the charges are not that, there is no such spike in charges. There are charges which will be there. Banks for surviving charges are there. Banks are taking hits on multi fronts due to all these challenges we discussed. But banks will be taking this. All are the fee income for bank. For fee income is very critical, and net interest income, as you mentioned, deposits are increasing. That is another revenue stream for banks. Banks are mainly looking at net interest income, income generating from income and from this kind of fees. So banks will not spike their charges just like that, but this is a critical element for bank survival.
Thank you, sir. So over to MC.
Thank you,
Thank
sir,
you.
for sharing.
Cyril, yeah. Hello, thank you very much. This is Cyril.
Sir, where are you? I'm not able to see you.
Here only. Can you see me now?
Sir, now you are.
How are you? Thank you very much.
I'm good, sir. I'm good,
With us
sir.
today.
Yeah,
And such a long session you had. Very good.
Yeah,
Thank you.
I think I didn't see that. Whether I overshooted, I am not sure.
No. It went on very well. Thank you very much.
Thank you, sir. Thank you for giving this opportunity. I would like to.
We are proud of you. The KRISTU School of Management is proud of you. Okay.
Yeah.
Such a distinguished alumni we had. Okay. Thank you very much for joining with us today.
Thank you, sir. Thank you all for listening to me.
Yeah.
All the best for all the future leaders.
Yeah. Thank you.
Thank you, sir. We'll catch up sometime.
Yes, sir,
We'll come to college and.
Yes, sir. Thank you. Thank you.
Yes, sir. Kindly stop sharing and please wait 2 minutes, sir. For
Okay, yeah.
over to me. Oh,
So,
sorry,
yeah,
sir.
thank you, Mr. Cyril. Yeah. Happy
Hi,
to
sir.
see you. Yeah, happy to see you back here
Thank
with us.
Yeah, sir. I think last time we met when I came there.
Yeah.
Cards.
Yeah.
Give the cards. Yeah. Happy to see you.
Okay.
Thank you.
Yeah. Nice listening to you.
Thank you, sir.
Yeah. School also is quite proud, as Dean said, about our alumni like you, and yeah, thank you very much.
Thank you. Thanks.
Yes, sir. 1 minute, sir. It's over to Melby.
Thank you, sir, for sharing the key insights on the importance of retail banking, the regulatory aspects and emerging challenges due to pandemic and other long-term issues which blew out of its proportion, and stating some of the new inventions, innovations, opportunities, and omni-channel experience. Dear sir, your insights on technical and practical banking innovations happening like granular approach, video KYC, fast-track retail analytics, branch branding strategy, etc., really made us to realize the current happening in digital retail banking. We are happy to have our own alumni today with wonderful sharing. Thank you for devoting your precious time from your busy schedule with all of us. Thank you very much for an enlightening and stimulating presentation. We feel fortunate to have you as a guest for today's session. Thank you, sir.
Thank you, Melby. Thank you all. Thank you.
Over to MC.
I now invite Ms. Sharon P. Abraham, Student Coordinator, to propose the vote of thanks.
Thank you, Melby. As we express our gratitude, we must never forget that the highest appreciation is not utter words, but to live by them.
Joined by 220.
John F. Kennedy. Good afternoon to all. I deemed it a great honor and privilege to propose the vote of thanks on this memorable occasion. Let me start by giving glory to the Almighty God for making 2 days virtual management development program conducted by KRISTU JAYANTI School of Management a big success. First and foremost, my sincere thanks to our guest speaker, Shri Cyril K. Babu, Deputy Vice President, Retail Banking, Forex and Remittances, Axis Bank Limited, who despite his busy schedule has found time to share his immense knowledge and words of wisdom with us, and also to be part of this virtual management development program. Thank you so much, sir. My heart fills with a lot of gratitude and respect for all our distinguished guest speakers. Shri Harish Bijur Consultants, Shri Haridas, Blue Star Limited, Srimati Merville Verghese, IDC United Arab Emirates, Shri Kumar Rajagopalan, Retailers Association of India, Dr. C. Vinod Hayagrav, Krishna Shetty Group of Jewelers, and Shri Cyril K. Babu, Axis Bank Limited, for not only sparing their invaluable time with us to grace this virtual management development program on disruptive innovations and opportunities in retailing post-COVID-19, the next normal, but also for enlightening us with their commendable talk on the subject. A big thank you to all our speakers. I I thank our well-wisher in his absence, Reverend Father Dr. Augustine George, Principal of KRISTU Jayanti College, for his constant stewardship, support, vision, and commitment in organizing and conducting virtual programs and far-sightedness towards the development of the institution. Thank you so much, Father. My heartfelt thanks to the genius mind behind all scenes, Dr. Aloysius Edward, Dean, Faculty of Commerce and Management, who is a constant inspiration for all the activities in the School of Management and our support system in overall development of the institution and all students. Thank you so much, sir. I would like to take this opportunity to thank Dr. M.K. Baby, Head School of Management, for his moral support, guidance, and encouragement for all such wonderful programs in the School of Management. Thank you so much, sir. My sincere gratitude to Dr. D. Ravindran, MDP Coordinator, for his efforts and perseverance towards planning this virtual management development program and making this event a huge success. Thank you, sir. I thank all the faculty members for their constant support towards making this virtual management development program a resounding success. Thank you, dear teachers. My sincere thanks to all our participants, academicians, research scholars, and participants from the corporates who have consented to be part of this virtual management development program from various parts of the country. Thank you, participants. I must mention our deep sense of appreciation to the tech team and all our coordinators for their involvement and all efforts towards making this virtual management development program a huge success. Last but not the least, I would like to thank all PGDM, MBA, first and second year students and all fellow Jayantians for being such an interactive audience and for actively participating and making this event a great success. Thanking you all once again, I remain.
Yeah, before we end, special appreciation to the entire student coordinators and also to faculty coordinator Dr. D. Ravindran for having meticulously planned and conducted the program. And